So I was just looking at Tata Motors' latest earnings report, and wow, it's a lot to unpack. It seems like they've had quite a quarter, but it's like complex.
Right. Well, that's often the case with big companies, especially in the automotive industry. There are just so many moving parts. Let's dive in, shall we? First, Tata Motors, for those who aren't familiar, is a huge Indian multinational, primarily known for its commercial vehicles, passenger vehicles, and of course, their ownership of Jaguar Land Rover.
Yeah, that's a good place to start. So they make everything from buses and trucks to like those fancy SUVs, right? It's kind of like a multi-layered business.
Exactly. And it's important to understand that they have different segments with different dynamics. It's not just one monolithic company, more like a conglomerate of auto businesses. Now, looking at the financials for this quarter, they reported a consolidated revenue of 113.6K Crore rupees, which is a 2.7% increase, which isn't bad.
Okay, so revenue is up. That's good. But what about profitability? I always get confused with EBITDA and EBIT.
Well, EBITDA, which is earnings before interest, taxes, depreciation, and amortization, came in at 15.5K crore rupees. It's a key measure of operational profitability, and it's down slightly by 60 basis points or 0.6% at 13.7%. EBITDA, which is earnings before interest and taxes, saw a positive bump by 60 basis points up to 8.9%. So while they made more money, a bit of that was eaten up by operational expenses.
Okay, that makes sense. So higher revenue, but some costs went up. So, the net gain is moderate. What about net profit? That's what investors really care about, right?
Absolutely. And their net profit stood at 5.6K crore rupees for the quarter. This is after all expenses and taxes. However, the PBT, which is profit before tax, was down by 75 crore rupees. However, if you look at the year to date, their PBT is looking quite good compared to the previous year, showing growth there, which is pretty solid.
Interesting. So, a bit of a mixed bag for this quarter, but the bigger picture still looks good. Now, I noticed there were some specific details about different segments, like JLR, Tata CV, and Tata PV. How did they perform?
Okay, so let's break it down. Jaguar Land Rover or JLR had a great quarter with record revenue and the highest EBIT margin in a decade and a ninth consecutive profitable quarter, which is impressive, right?
Oh, wow, that's like pretty amazing. So, the luxury end of the business is doing really well. That's like reassuring.
Exactly. It's almost like a luxury car operation with a bit of a legacy, doing very well right now. However, their EBITDA margin was down by 200 basis points, which is something to look out for, though their EBIT margin improved by 20 bips. Tata CV or commercial vehicles saw a dip in revenue due to lower volumes, but their EBITDA margins actually improved to 12.4%, which reflects cost savings and PLI incentives.
PLI, that's the production linked incentive, right? It's like government support for manufacturing, if I remember correctly.
Yes, that's exactly what it is. And the impact of that is showing in the margins, right? Tata PV, which is passenger vehicles, had a revenue decline, but they also saw improved EBITDA margin at 7.8% due to cost controls and incentives. So it seems they are focusing a lot on cost management, while each segment has a different story to tell.
So each segment has its own unique set of challenges and wins, it seems like. So I guess overall, how is their cash flow? Like, do they have enough cash to, keep things going and expand?
Good question. Their automotive free cash flow for the quarter was 4.7K crore rupees. And for YTD FY25, their business has grown 1.6% over the previous year to 323.0K crore rupees. This indicates that they have some decent cash generation capabilities, but it's always good to keep an eye on how they are using that cash for future growth and dividends, right? And
Right. So, like reinvesting in the company or paying back shareholders. What about financial ratios? Do they have healthy ratios to back their performance?
yeah, let's look at a few of those. The debt to equity ratio is 0.95, which is okay, but it's something to monitor. It shouldn't get too high, right? Interest service coverage ratio is 4.87, which means they can comfortably pay off their interest costs with their earnings. The net profit margin is at 4.91%, which is reasonable given their business operations. So these ratios give us an idea of their financial stability.
Yeah, that makes sense. So, overall, they seem fairly healthy and stable. What about trends? I mean, is there anything specific that has shifted from last year to this?
Well, if we look at the year to date numbers, their revenue has grown modestly. However, this quarter showed that the JLR segment really turned things around. While Tata CV struggled on the sales front but improved efficiency, Tata PV is also on the growth track, which was pretty surprising for me. So there's a clear trend of JLR's luxury segment performing well, while the domestic segments are also showing resilience.
Okay, so JLR is definitely a strong driver for them right now. So, based on all of this, what would you say is their outlook? Are they likely to do better or worse in the coming months?
Well, the company has said that they expect domestic demand to improve gradually due to infrastructure spending and new product launches. And they expect JLR to continue its growth while remaining cautious with the demand in China. So they are signaling confidence for the near future. And they're also aiming for an EBIT margin of greater than or equal to 8.5% with positive net cash for FY25.
That's good to know. It shows they have a pretty clear vision for the future, which is important. What about any specific areas we need to keep an eye on, like, any red flags?
Well, like we touched on, JLR's profitability depends a lot on external factors like demand in China. So that's something we need to watch. Also, the CV segment is still recovering from low volumes and, it might be slow for a while. And also, as the company mentioned, it's critical to focus on continuous cost reductions in each segment. But I think it's like a constant challenge for them. I mean, it is for every company.
That makes sense. They've got different headwinds they need to manage. Now, I'm just thinking about the general public who might be interested in this information. What should be like the main takeaway for potential investors?
I think the key takeaway is that Tata Motors is a company with solid fundamentals and has shown resilience in a challenging environment. They have a clear growth strategy and a multi-layered business that balances luxury, commercial, and passenger vehicles. JLR is doing amazingly well, and while the domestic business is undergoing changes, it's showing positive signs.
So it's like they've got a strong foundation, but they're still adapting to changing markets. And those that follow the stock should keep a close eye on each segment individually.
Yes, exactly. And it's not just about the present, but their push into electric vehicles and sustainability also makes them a company that's looking to the future. They also had a very ambitious plan to demerge into commercial vehicle and passenger vehicle segments, which is something to look out for. It might unlock shareholder value.
This demerger seems quite interesting. It's like splitting the company into two. What's the idea behind that?
Well, the idea is to create two separate listed entities for their commercial vehicle business and passenger vehicle business. This allows them to focus more on each segment individually. It should allow them to optimize their business and also unlock more shareholder value and get sharper focus for each segment.
Okay. So it's like separating the different parts to perform even better individually. Speaking of the shareholders, I believe they also issued some new ordinary shares, right? There was a mention about cancellation of A ordinary shares. What was that all about?
Right. That was part of a scheme of arrangement where they cancelled the A ordinary shares and issued new ordinary shares in exchange. This was done to consolidate the shareholding structure. So it's basically streamlining the capital structure, which can be beneficial in the long run.
That makes sense. I feel like this is a good point to pause and mention. Disclaimer, we advise investors to check with certified experts before taking any investment decisions. So yeah, always check with a pro. Okay, so what else caught your eye in the report?
Well, I noticed that Tata Motors received a sanction for automotive production linked incentives, PLI, and recognized an income of 351 crore rupees. These incentives will help boost profitability further, and it does show the government's push for manufacturing in India. So these government initiatives are like very good for them and for the country in general.
Yeah, that definitely boosts their bottom line, right? So, any other key updates on their strategic initiatives?
Yes, I think the most interesting is JLR's reimagined strategy with their modern luxury initiatives. The Jaguar Type 00 design vision revealed in Miami shows their push into luxury. The Range Rover electric developments and the work in sustainability through the Circularity Lab. It's like very cutting edge, showing they are not just sitting still, but instead going for innovation.
Yeah, it's a lot to digest. It's good to see they are focused on sustainability and luxury. and not just the commercial segments.
Absolutely. And, it's good to see these large companies focusing on eco-friendly practices and innovations and not just chasing the next quick buck. It benefits everyone ultimately. They also showcased a bunch of new vehicles at the Bharat Mobility Expo, including EVs and vehicles powered by alternative fuels, which shows that they are not just thinking about the future, but actively building it.
Yeah, it's like they are like trying everything, right? And it's clear that they're trying to hedge their bets against changing market conditions. So, like, any last thoughts or surprises about this earnings report?
I think the biggest surprise for me was the strong performance of the JLR segment, even in the face of economic uncertainties. They seem to be doing a great job in managing their brand and delivering luxury experience. And also that they are focusing on making EVs, not just talking about them. That's a really big, really important sign for the future.
Yeah, that's a big takeaway. And also, the focus on cost reduction across the board is something they need to maintain, right? So, what do you think? Should we tell our listeners to share and subscribe to our channel?
I think that's a great idea. So if you liked this deep dive, please, do like, share, and subscribe. It helps us bring out more analyses like this. And we're always keen to help people understand the complex world of finance and investment.
Absolutely. And so to summarize, Tata Motors is like a complex but resilient company with a mix of performing segments and some that are in a turnaround. They have a solid roadmap for the future with a strong focus on sustainability and luxury, but some potential challenges, like those in the Chinese market and some operational efficiencies they need to continue working on.
Yeah, and also while they are showing strength, investors should, always be cautious and do their homework, but they are doing great right now.
Agreed. It seems like we have touched upon all important points and provided a good summary for everyone. So, any more questions for us to cover, or is that it for today?
I think that's a wrap for today. We've covered all the key points, and I feel we've given a pretty thorough overview. Thanks for joining me today.
Yeah, thanks for all the insights. It was fun breaking this complex report down. And thanks to everyone for listening.